Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, doing some traveling this weekend, so going to combine some videos to knock them out at once. Looking at SPY, the bulls got follow through. Initially we consolidated this morning and it was healthy consolidation. It's important to zoom out to midterm timeframes, especially after such a strong, fast move like we saw yesterday. So we started the day bearish, and if you're looking at the shorter term timeframes, in the morning you think, uh-oh, bears are back in control, we're giving the move back. But if you look at the longer term timeframes like the hourly, it was just very healthy consolidation. Ended up being a bull flag, and then we saw continuation. And again, it looks like a dump at the end of the day. And yes, we pulled back a decent bit from the high of the day, but it's still very clearly an uptrend on the hourly time frame. So that's what we're watching for, an indication that the daily consolidation is going to start if we lose the hourly uptrend. So anything above 270, 243 at this point, about $1.50 of space, anything above that level is a higher low. If we're going to see a reversal, depending on what extended hours does, it could potentially be the head and shoulders pattern, where we come down, set a higher low, bounce, unable to break the top, which is 275.55, and then come back down and roll over and lose the hourly uptrend. That's something to be keeping an eye on. But as long as the hourly uptrend is intact, the bulls have full control. So at this point, we are rejecting from the 200-day moving average resistance and not necessarily paying as much attention to that as I am to the hourly trend. And again, if we lose that hourly trend and start to consolidate on the daily, there's the possibility that our weekly lower high has been set. So that's the most likely scenario for me, the inability to break 281 on this bull move and the need to consolidate and see this pattern continue to tighten. So I'm going to be keeping an eye out for that. And once we do start to consolidate and lose the hourly uptrend, we'll be watching for the potential of how significant is that consolidation. What does the volume look like behind it? Do we give back the entirety of the bull day that we saw yesterday? And those are all little clues that we're going to be looking for. So SPY on the weekly time frame, it's all about whether that lower high has been set. And again, the more likely scenario, in my opinion, pending any kind of trade deal with China, is going to be a lower high compared to 281 as we head into December. IWM saw a little bit of follow through as well, nothing significant. Same thing, pretty much the hourly uptrend and the tightening weekly pattern. Anything under 157.90 is just a lower high, and we're going to be watching to see, can the bulls break that level, or are we going to continue to tighten? And again, the more likely scenario is we're going to continue to tighten on these weekly time frames. QQQ, need to update here. QQQ on the weekly time frame, anything under 175.58 will just be a lower high, and need to update the weekly as well. But we've got the indecision candlestick today, and it's the same thing as SPY. We look at the hourly time frame, and we have the higher low pattern intact. You can see those charts are pretty much the exact same thing. So don't even need to update anything with QQQ aside from the number difference. And the hourly higher low that the bulls want to maintain is 166.82 in order for the bulls to remain in control. So that's a key support level to be watching. And same thing as SPY. As far as the weekly time frame goes, it's a little bit different because anything under 175.58 is just a lower high, and then the bulls need the higher low. So the setup here, if we're going to get a trend reversal, would be an inverse head and shoulders pattern with the left shoulder, the head. If we reject and form a lower high, we need the right shoulder for a higher low, and then the bull break. Whereas for SPY, it would be an equilibrium and bull break if we broke bullish. Financial sector. So the financial sector today as well did see some pullback, and we couldn't break the high of yesterday, and that was an initial red flag. If we don't see both sectors going in the same direction, then we're not going to see a big significant follow-through kind of day. So the fact that the financial sector could not break the high of yesterday, 27 or 27.06, was an indication, hey, we're not going to have a big bull day today. We're going to look for healthy consolidation. So we'll see how this inside bar breaks. If this breaks bearish, the odds of the hourly uptrend on QQQ and SPY being lost will increase. And if it breaks bullish, the odds of that hourly uptrend remaining into tomorrow will increase. So it's all about that inside bar. That's going to be a good indication for those other names to be watching. 26.72 support, 27 psychological resistance. And the weekly time frame here as well is going to be the tightening range. And it's all about the resistance level up at 27.52. Got fairly close to it. We got less than 50 cents away, but we couldn't break that resistance level today, and we're stalling out a little bit. So if we look at XLF on the hourly time frame, it's a bit of a different setup. because it's an equilibrium on the hourly rather than that clear uptrend. So a little bit in more importance for me, just because that is an inside bar on the daily time frame. I think XLF might be a nice indication tomorrow to be watching to see how we're going to see SPY and QQQ react as well. So if we get a bear break on XLF, that's going to probably end the week with consolidation in the entire market. Whereas if we get a bull break, we could see a strong close in the market. VIX on the daily time frame. So today, again, need to update. We need to watch the key support, and that's down at 1810. The bulls showed up in a big way today, but gave it all back. So we still have the daily uptrend. 1810 and 1818 are our support levels. Anything under 2381 is just a lower high, and we are watching to see if the daily uptrend is lost. The weekly time frame will continue to tighten, and the weekly time frame at this point is attempting a higher low compared to 1609. So that's the most important level. So short term, we're watching XLF for how it's going to break its daily inside bar. And longer term, we're watching if these weekly patterns are going to continue to tighten, which is the most likely scenario. Checking some individual names here. Tesla, we are topping out with a lower high on the daily. So we pulled back, we lost the uptrend, and now we're setting a lower high at 348.28. So that's the most important resistance in the short term. 348.28, 353.10, and then 366.75. The bulls must hold the low of 325. So the bulls are going to try and form a higher low compared to 325 and continue to trade sideways. You can see the Bollinger Bands are tightening up due to the sideways trading that we've seen over the last couple of weeks. And the weekly time frame is healthy consolidation, trying to be a bull flag, which it still is at this point. I use the exponential moving averages, the 8 and the 4 period here, as a guide on flags. And as long as there's support, the flag potential remains intact. Facebook on the daily time frame finally got its bull break. And that was a clear signal. When you see these 4 resistances all making a top, 137.19, 137, 136.61, 136.79. So it's a very clear bull signal when you break 137.19. And we got solid follow through up to 140 from there. So significant in the short term for that follow through, but anything under 145.58 is just a lower high. We have exponential resistance on the weekly time frame to be watching that has rejected the price almost a dozen times recently. So overall, the Facebook bulls absolutely have a lot of work to do, but this was a laggard situation where today was the first day we broke that high of last week. Amazon blew through that resistance level. Google blew through it. So this is definitely a laggard play for Facebook. But again, a very clear signal. The more rejections from a resistance zone that you have, the more clear it is to all traders, and the shorts are going to cover and the bulls are going to go long when that level does break. So nice follow through and the bull MACD cross there as well. It's also important to watch this daily middle Bollinger Band. Look at all these rejections. 1, 2, another half dozen there. So about 6, 8 rejections from this daily middle Bollinger Band in the last 2 months, and that is going to be in play for the next couple of days at least. Weekly time frame, again, exponential resistance. Once we see these cross, it will be notable. And we're waiting for a bull cross of those levels, and that's not going to happen for a few weeks at the least. Amazon stalling out. That's an indecision candlestick. Look at the last one we saw. Top of the uptrend, indecision doji. That marked the top. So we have to be cautious here. If we pull back tomorrow and break 1652, that's going to be just another daily lower high, and then we're going to look to pull back and form a higher low. The bounce was significant enough here that we will anticipate that higher low will be able to form. But again, it's just a weekly lower high because these tech sector bulls broke the low of the October dump. We are looking at anything under 1784 as a lower high, and we might be in for our start of the pullback. I'd be watching Amazon for a bearish entry tomorrow. If XLF breaks the inside bar bearish, I know that Amazon's obviously a tech sector name. Signal number 1 for me to go bearish on Amazon would be breaking the low of today. If we see tech sector weakness, or if we see the financial sector break the inside bar bearish, those are all things that would have me watching for Amazon to pull back a bit. Netflix on the daily chart, significant follow through here as well. So we're looking now at 300 psychological, and then the most important level is 332. That's a long way away, still $50, so that's not in play. And the weekly time frame, anything under 332 is just a lower high. So this is another one where we're scouting the bulls exhausting themselves. And if we look at the hourly time frame on Netflix, got to go back to the other side here. But if we look at the 4-hour time frame, we are certainly extended on this move. There's been no consolidation. So keep an eye out. Keep an eye out for weakness for a short-term pullback. We'll look for a higher low compared to 275.50. So the next consolidation we see, we'll anticipate that higher low will still form. Not going to lose that hourly uptrend anytime soon. But if we see weakness in the market, we're going to look for these tech sector names that have had such a strong few days in a row here to give us another lower high and have to form a higher low. In the short term, after today's action, it's clear that Amazon bulls, after being the lead bull, a little bit more tired than Netflix, who closed near the high of the day, and Facebook, who closed fairly strong as well. Certainly not indecision like we saw on Amazon. And Google also closing fairly strong. So Amazon stands out for its indecision, but Google's struggling at resistance here, 1110, 1108, 1118. So 1110 and 1108, and we topped out at 1100, psychological. So a couple key resistances about to be tested. Same thing if we lose the hourly uptrend, we look to consolidate and form a daily higher low. And the weekly time frame, anything under 1110 is just a lower high. So starting to see things slow down a little bit after that big bull momentum move from yesterday, but bulls still have the hourly uptrend. And as of this point, the bulls still have full control as long as that is the case. So it's worth keeping an eye out for those bearish entries on names like Amazon that are showing the first signs of weakness. But overall, we are still in an uptrend. So don't lose sight of that fact. We'll see how we open tomorrow morning and whether the bulls, again, you have to break the high of today first thing to give names like Facebook and Netflix that did close fairly strong confidence in continuation. They want to break the high of today first thing tomorrow. So tightening weekly patterns on the major exchanges here, I should say the major markets, and individual names in the tech sector a bit more extended than others. So hope you have a good night, and we'll be back over the weekend. I'll be putting out some videos slow and steady, and we'll see you next week for back to the regular video routine.